Kingsoft Cloud just dropped their Q3 2025 earnings, and let me tell you, this is one of the most impressive transformations I've seen in the Chinese cloud space. We're talking about a company that just posted its first ever quarterly profit while simultaneously crushing it in the AI game. If you're invested in cloud computing or AI infrastructure in China, you absolutely need to hear these numbers. Let's count down the top 10 takeaways that could reshape how you think about this company. Coming in at number 10, let's talk about Wuhan expansion. Kingsoft Cloud has been aggressively building out its talent pipeline in Wuhan, and the numbers speak for themselves. The employee headcount in Wuhan is now 2.8 times what it was back in 2022 when they first launched the strategy. This isn't just about saving costs, it's about tapping into regional talent pools and building sustainable R&D capabilities outside of Beijing. This dual research center approach is positioning them perfectly for long-term AI development. Number 9 is all about new product launches. This quarter, Kingsoft didn't just rest on existing services. They launched a model API service that makes it easier for customers to invoke and manage AI models. They upgraded their online model services with multiple open-source foundation models and automatic scaling. Plus, they introduced a data annotation and dataset marketplace. These aren't incremental updates, these are foundational products that will drive future revenue streams. At number 8, we've got enterprise AI wins that show real-world application. Kingsoft achieved a major breakthrough integrating AI with traditional Chinese medicine for chronic disease management. They're also advancing intelligent credit approval systems for banks, moving beyond just generating credit reports to managing the entire loan lifecycle. These aren't vaporware announcements, these are deployed solutions generating revenue and building competitive moats in specific verticals. Number 7 brings us to public cloud surge. Public cloud revenue absolutely exploded to 1.75 billion renminbi, up 49% year-over-year. This wasn't just AI either, though AI was certainly the primary driver. The company is seeing strong cross-selling between intelligent computing and basic cloud services, showing that their platform approach is working and customers are deepening their relationships with Kingsoft. At number 6, let's discuss their CapEx versus leasing strategy. Management clarified their approach. They use capital expenditures for premium customers like Xiaomi, where they have confidence in long-term demand and payment. For growth stage and smaller companies, they leverage leasing models to reduce risk. This flexible approach lets them scale quickly while managing balance sheet exposure intelligently. It's not about hitting arbitrary targets, it's about matching procurement method to customer profile. Number 5 is massive, Xiaomi ecosystem growth. Revenue from Xiaomi and Kingsoft ecosystem partners hit 691 million renminbi, up 84% year-over-year, and now represents 28% of total revenue. Management expects to fully utilize their connected transaction quota this year, and is optimistic about increases next year. This ecosystem provides predictable, high-quality revenue that funds their broader AI ambitions. At number 4, we see the company's strategic pivot from training to inference. While most current demand still comes from large customers doing model training, Kingsoft is increasingly seeing broader adoption of AI inference across multiple industries. They're positioning themselves ahead of this wave, which management believes will carry higher margins than training workloads. This transition could be the key to sustained profitability. Number 3 delivers impressive margin improvement. Adjusted gross margin climbed to 16%, up from 15% last quarter. More dramatically, EBITDA margin hit 33% compared to just 17% last quarter. This shows the company isn't just growing revenue, they're doing it efficiently with strong cost control on IDC, servers, and operating expenses. The economies of scale are finally kicking in. Coming in at number 2, and this is huge, Kingsoft Cloud achieved its first ever quarterly adjusted net profit of 28.73 million renminbi. Adjusted operating profit reached 15.36 million renminbi with a 0.6% margin. After years of losses, the company has turned the corner. This validates their entire strategy of investing in AI infrastructure while maintaining discipline on costs. Profitability and growth together, that's the holy grail. And the number 1 takeaway, AI revenue explosion. AI cloud billings skyrocketed 122% year-over-year to 782 million renminbi. And here's the kicker, AI now represents 45% of public cloud revenue, up from just 31% a year ago. Kingsoft successfully supported large-scale training and inference for top internet customers and is expanding rapidly. With revenue up 31% year-over-year to 2.48 billion renminbi and AI as the primary driver, Kingsoft Cloud has firmly established itself as a serious player in China's AI infrastructure build-out. This is the transformation story we've been waiting for. Leave your thoughts on Kingsoft in the comments below, and don't forget to subscribe for more earnings analysis from Earnings Central.